Charlotte McLeod with the Investing News Network, and here today with me is Rod Husband of Cipher Research. Cipher is a new research company with a unique perspective on the mining and metals sector. Thank you for joining me today, Rod.
Thanks for having me.
Okay, so to start off, I wanted to ask you to tell me how Cipher differs from the many other research companies that are out there. What are you doing to help investors succeed?
Well, probably the first and foremost, we're independent research. So we go by the motto, by investors for investors. And a lot of other newsletter writers or analysts, they provide paid for research. So companies pay them to write reports and get it out, distributed to the public. We have decided that we're not going to do that. I mean, we are simply, we're investors ourselves, and we want to share our knowledge with other investors like us. How are we? Probably the biggest way we're different would be we don't tell you what price to buy at. We tell you what we value the company at, and our analysis is based on asset value. So we give you a fundamental value for the company, and if the company is trading below that, then essentially it's a buy, and each individual investor can then determine the risk that they want to take in terms of potential return.
Okay, so you're value investors and not traders. Can you go into a little bit more detail on the distinction between the two?
Absolutely. I mean, value investing basically is what we do, establish a fundamental value for the company, and if the price is below that and the potential reward is within your risk-reward profile, then it's a buy. And it remains a buy until it trades outside that range. Traders, on the other hand, look for ones that they can flip. And stocks often trade above what we deem their fundamental value in times of exuberant markets. There can still be trades in there, and traders like that. They look for volatility, and they look for momentum, basically.
Right.
And what we are is strictly, this is what it's worth. If it's below that, it's a buy.
Okay. So you're starting your work in a market that is less than stellar. Can you tell me why you decided to do that and what your take on the market is right now?
Well, let's go backwards. First,
Right.
take on the market. It's hard to get much lower, and as a result, there's tremendous value. Companies are trading way below, or a lot of companies are trading way below their fundamental value. So it's a good time to be out there as an investor, to put your money to work. I don't know, I won't predict when it's going to turn around, but definitely it will turn around. And if you notice, nowadays, you start to see some of the news, the smart money's moving in. And when the smart money's moving into the industry, and that means the old money, the guys that have been around a long time, when they're moving in, that's when the average investor should. Not wait until the market has turned and the prices are buoyant again.
Okay, so overall you're looking for companies with fundamental value. Can you tell me what criteria you use to evaluate companies? It sounds like you're very data-driven.
Yeah, absolutely. I mean, that's really what it is, statistical analysis of historical transactions. That's what we base a value on. So for exploration and development companies, for instance, we go out to determine how much can gold in the ground be worth. And that starts with looking at historical transactions and what were the takeover prices for ounces of gold. And we establish that value. Turns out that in the last 25 years, 80% of the transactions have occurred at $90 an ounce or less. So that becomes a benchmark value now. Then we have to turn around and determine how many ounces the company has and do the multiplication. You got price times quantity of ounces, and you put that together, it gives you a baseline fundamental value. Now, the other area where we differ from a lot of newsletter writers is we are technical. I'm a geologist, and so we're able to interpret technical reports and make certain adjustments. For instance, when they do a resource estimate, engineering firms use a set cutoff grade and a price of gold, and often those might be too high or too low and give a resulting resource that looks bigger than it, quote unquote, really is. So we're able to look at those, make adjustments, determine what a fair price of gold in the ground would be, and determine fundamental values.
Okay, and so looking at majors and juniors, do you have a different strategy in terms of criteria?
Absolutely. Once a company's in production, it ceases to be an exploration development company, so it naturally gets a little bit higher valuation. So if you're looking at takeovers or straight valuations or market valuations of companies that are mining companies, where we use $90 as an upper benchmark for exploration development companies, that number goes up to 150 to depending on the price of gold, up to as high as $250 an ounce.
Okay. Can you tell me a little about the companies in your portfolio? So how many are there, and what is your strategy for doing reassessments?
Sure. We have focused on advanced gold exploration and development companies to start with. And we evaluated 250 companies that had a resource and an engineered resource.
Right.
So that meant it had either a preliminary economic assessment, pre-feasibility, or feasibility study, because then we could look at the economics. So then we developed a model to determine if that project had the economics to succeed. And we have 5 tests that we put a company through, and if it passes at least the top 4 tests, then it becomes a company we like. So of those 250 companies that had engineered resources, only 44 met our criteria. And of those 44, when we started doing this work in the middle of 2013, until we established our portfolio in November, 18 got taken over. So that in itself was evidence that we had a pretty good model. So since that time, companies have been financed, and now we're left with a portfolio of 23 companies.
Okay. Can you, just to close, tell me a little about what Cipher has planned for the short term and then looking a little longer term?
Absolutely. I mean, short term is to get our word out, get our research out, invite people to come and visit us at the website, send emails in with comments, questions, things that we can help people understand the markets. Longer term, we're going to develop into a subscription-based, so we can cover some of our research costs and provide even more and hopefully more in-depth information to the public. And we are talking with a few companies now, like actually companies that are looking to become investment or equity streaming companies, about consulting with them, and we're working on a few deals there. So it's quite exciting that a lot of people out there have seen our work to date, albeit as limited as it has been, and they really are embracing what we are saying.
Okay, well that's great. Thank you so much for joining me today, Rod. Again, Rod is with Cipher Research, and I'm Charlotte McLeod with the Investing News Network.
Thank you very much.